Hi traders, this is Chris from Elite Currency. Today taking a look at the euro dollar and pound dollar after the news event on the pound with, of course, the interest rate hike that the Bank of England has done. Let's take a look what impact that had on the pound. All right, there we go. Pound dollar, first of all, daily chart. You can see bearish day so far, a lot of volatility throughout the event, but eventually the downside winning the battle here, despite the fact that the Bank of England increased the interest rate for the first time in about 10 years, I believe, from 0.25%, a quarter percent, to 0.5%, 0.5. And I guess because it was priced into the market, that could be one reason. In any case, whatever the reason is, price action is giving us the clue that it was bearish response, and I think that it's something that should see followed through to the downside. I did not trade it myself. I don't like trading interest rate decisions personally, but now with this kind of clue so far, if we have a good daily candle, a good bearish daily candle with a close near low, then that would be interesting to see how far this could push. I think tomorrow would be a bearish day, and if tomorrow is a bearish day, then basically it should end up as a bearish candle, a weekly candle, I should say. So basically, from this point of view, we see a likely continuation tomorrow if we get a good candle close near the low. All right, so let's take a look at the daily chart once again. Let's see if we get, first of all, that daily candle close near the low. That's step one. And if we get a big wick here at the bottom, well then, of course, on today's candle, then it's just an indecision candle. So a lot rides on that. From an intraday point of view, for the next couple of hours remaining for Thursday, I personally really don't see much of a trade. We had some kind of ABC zigzag up to the minus 61.8 target, and then we had a triangle, and that triangle broke to the downside during the news event. Other than that, I really don't see much to trade at this point. It's at support potentially, and it could bounce because of that. So from my perspective, I am just simply waiting for this daily candle to close. On a lower time frame, you might see some ups and downs as volatility kind of moves up and down here. Ultimately, though, I just rather wait for a pattern on this time frame, maybe even a 1 hour chart, some bear flag, and a continuation break would look good, especially if today's candle, once again, is closing near the low. So that's important from my point of view. And if it does close near the low, then basically this could be continuing or completing, I should say, an A right here, where I have the line right there. That would be an A. Here would be the B. This would be the C. And this basically bearish momentum is still dominant. This would be a correction, and then down it should go. All right, that's the idea if this bearish version holds. All right, so let's see. Next is the euro dollar. Euro dollar has gone sideways for very long and is in a long, lengthy correction. Unfortunately, not much really new to tell or say about this euro dollar, because it's still at the same spot really we discussed on Tuesday. All right, price is still right at the 38.2 fib. It's trying to break above resistance, but not managing. It's trying to break support, but not managing. So it's still at this exact same spot. So, from this point of view, still waiting for the breakout to the downside. If and when price does break, once again, the target is the 38.2 fib at around 115, 114.80 to be precise. But 115 is a round level, and those tend to be psychological turning spots. So I would aim for 115 or just above it, 115.10ish, up to 115.30, rather than for the exact level at 114.80. All right, but that's what the target should be if this correction finally breaks. At this moment, we've had about 21 4-hour candles go sideways. That's a pretty lengthy consolidation for this week. And I wouldn't be surprised if we get a break in the near future. A breakout could look like if there's a bearish candle on the 4-hour chart with a close near this support trend line. All right, so if there's a candle close maybe below 116.25 with a close near the low, that is likely going to indicate the breakout today and tomorrow. It might not necessarily break today, of course. In that case, it would just be a very, very small candle. But yeah, there's still 1.5 days left where it could break. So keeping an eye on this daily candle too. If there's a big wick, that might help. but specifically the 4-hour chart for this breakout candle. I'm not that much interested in the 1-hour chart at the moment because it's such a big consolidation that I think the 4-hour chart is probably the appropriate one to look for a breakout to the downside in my view. So, but all in all, still very classical bearish momentum sideways correction, unless it breaks above the 61.8 fib at 117.05. So even if it were to make some upside still, resistance at the 50, 61.8 fibs are, in my view, still likely turning spots, but that is invalidated if price does push above the 61.8 fib. All right, that wraps it up for now. Join our ECS Live. Of course, the trial is about to end, so claim your spot. The first 100 traders get the discounted price of €75 per month. Wish you all good trading and talk to you soon. Cheers.